Good morning, folks. Ron Ray here with Turning 65 Solutions. This morning, we are going to be talking about a topic that is very confusing to Medicare beneficiaries, and it can be confusing to insurance agents as well. So we're going to kind of demystify a little bit of it this morning, and that topic is long-term care, nursing homes, assisted living facilities, home health care. Now, the first thing I want to cover just is what exactly, if anything, does Medicare cover for long-term care? And the short answer to that is Medicare doesn't cover anything for long-term care. Medicare does cover some short-term stays in a skilled nursing facility and also some home health care recovery. So let's just get a quick view of what Medicare pays for those short-term stays. So we're on the CMS website. That's the Centers for Medicare and Medicaid Services. So cms.gov. This is just a news release talking about the Medicare cost for 2021. I'm going to skip down here to the part where we talk about Part A coinsurance and Part A deductibles. So skilled nursing facility services are covered under Medicare Part A, okay? Because you're going to be spending the night, you're admitted to the facility. These are covered under Medicare Part A. Now, first of all, for under most circumstances, you're going to have been admitted to a hospital for at least 3 days in the prior 72 days to qualify for this service anyway. Okay, so let's say you go to the hospital. You're in the hospital for 3 days and the doctor needs you to, you're not quite ready to go home, but they need to discharge you from the hospital. So you're in between. So you're going to kind of go to this halfway house called a skilled nursing facility. Sometimes we refer to it as a nursing home. And Medicare will cover the first 20 days of the cost of that skilled nursing facility. 20 days. Medicare covers it at 100%. You pay zero. After 20 days, from days 21 through 100, you will pay in 2021 a $185.50 per month copay. I'm sorry, per day copay. $185.50 per day out of your pocket. Medicare pays the rest for days 21 to 100. Now, if you have a good Medicare supplement, like a Plan N, or a Plan G, or a Plan F, well, those Medicare supplements pay that $185.50 for you. So between Medicare and your supplement, they're paying the bill for you. You pay zero. But if you get to day 101 and you're still in that nursing facility, guess what? Medicare's out, your supplement's out, you're on your own. That has now turned into a long-term care situation. So unless you go back to the hospital for 3 days and come back to the nursing home, you're going to be paying the full bill. Okay? So $185.50 out of your pocket for days 21 to 100. Beyond day 101, you're on your own. Okay, so that is skilled nursing facility care under Medicare. So beyond day 100, you're on your own. But we know that these things can be very expensive. We're looking at $150 a month, a day, $6,000 a month or more. It all depends on where you're at. Obviously, these prices vary from region to region, but it's not unusual to see bills somewhere between $600 and $7,500 a month. So I'm going to take you to another page here real quick. So we're just going to talk real quick about what is long-term care in the first place. Well, long-term care refers to a range of services and support for your personal care needs. So this is not necessarily medically necessary care. So at least as far as Medicare is concerned, it's not medically necessary, but rather it's help with the activities of daily living. Bathing, dressing, toileting, transferring, preparing of meals, medication reminders, things like that. Not medical care, but activities of daily living. Now, there's different types and levels of long-term care. And there's assisted living, home health care, and finally skilled nursing facility care. That's full custodial care in a facility. Assisted living, there's various different levels of that. You may be in a group home, maybe have assisted living within a skilled nursing facility care, but you don't have that full 24-hour nursing coverage. It could be in one of these 55 plus living communities where they provide these assisted living services. There's various different ways to get assisted living. Home health care is just what it says. It's somebody coming into your home and helping take care of you. So you stay in your home, you have a personal care assistant come in and help you with these activities of daily living. So maybe they're preparing some meals for you. Maybe they're doing some light housekeeping. They're changing your linens and doing some laundry. And maybe it even rises to the level of helping you take a bath or helping you get on and off of the toilet. But again, you're staying in your home. Now let's look at the need. AARP as of 2017 says that 52% of people who turn 65 today will develop a severe disability that will require long-term care at some point. And in 2016, the average annual cost of a private room in a nursing home was about $92,000 for a private room and $82,000 a year for a shared room. In that same year, the average cost for home health aide to provide care was about $20 an hour. I can tell you that now in our area, it's about $25 an hour. So the rate of inflation for senior care, for seniors in general, is much higher than the general rate of inflation. And in fact, healthcare rises at a rate of inflation about 2 times that of standard inflation. The average health aid worker working approximately 30 hours a week, and the annual cost is about $31,000. So you can see it's quite less expensive to have that help at home, especially if it's not 24/7, to have that done in your home. For assisted living, the base rate averaged about $46,000 a year. So do the math. The average annual room cost for a semi-private room, that means you're sharing the room with somebody else, is $82,000. And we know that the average length of stay in a nursing home is about 3.5 years. So once you go in, you've got about 3.5 years before you die. So what is the cost? That's going to cost you about $287,000 if you go into a nursing home. Now, where does that money come from? So it either comes from your savings, or it comes from your children, or it comes from some sort of insurance that you've purchased. So how do we pay for long-term care? Number one was just a traditional long-term care insurance plan. There are life insurance policies that provide these same benefits. There's asset-based programs like annuities and certain other types of life insurance plans. You can spend down your assets in order to get to Medicaid. And number 6 is something that I quite haven't completely bought into this, but the discussions are out there, and I'm not necessarily recommending this. I'm just saying that people are talking about it more and more, and that's a reverse mortgage. And we're not going to get into reverse mortgages on the video today. If you want to know more about that, give me a call and I can put you in touch with a mortgage broker that I trust, not to rip you off and to give you good information. So long-term care insurance is just what it says. It's long-term care insurance that can pay for home health care, assisted living facility, or skilled nursing facility. It pays either a maximum daily or monthly benefit of the pool of money. So you may have buy a policy that is supposed to pay $5,000 a month for 5 years. That's $300,000 pool of money. Once you reach the maximum of the pool of money, the policy is expended and now you're on your own. Some of them do offer inflation protection, so the benefit increases each year by a factor that you choose when you buy the policy without any increase in the premiums. Now, some of the drawbacks to these policies are they're pretty expensive. And by the time you're in your 60s, they're really expensive, and it's usually too late. I think kind of the sweet spot to buy long-term care insurance is in your 50s, so from 50 to 59. And in fact, age 60 or 65, depending on the policy, is kind of a trigger age when rates go up and underwriting gets a little bit tougher as well. So if you can buy it before you're 60, I think you're doing pretty good. And another drawback is you have some risk that you can lose the premium. So you could pay, $4,000 a year for a policy and pay on it for 10 years and die of a heart attack and never go into a nursing home. Or you're losing $40,000. You're not getting any of that money back. They're all policies that have a return of premium rider. However, that rider is so expensive, it doesn't really make sense to get that. Now, life insurance, there's some life insurance policies that can help with long-term care. They have what's called living benefits, which means that they give you access to the death benefit of the policy before you die to pay for certain things like long-term care, terminal illness care, critical illness care. So you're using a portion of the death benefit before you die. And that's a good thing because we know that a life insurance policy is the only policy that is guaranteed to pay out. So insurance companies say, if we're going to have to pay that money out anyway, might as well let you have it now. Now, all life insurance policies do not have this benefit. Some of them have it built in. Some of them have it as an extra rider that you pay for. So you have to be careful, examine the policy carefully, and make sure you understand what you're getting into. Now, one of the pros to these is they're a little bit easier to qualify for than a long-term care policy because you're really buying a death benefit. Now, they can still be quite expensive by the time you're in your 60s, but they are often less expensive than a long-term care policy. They often do not have inflation protection. So that death benefit for most policies is going to be locked in. Once you purchase it, say you purchase a $300,000 policy today, that's enough to cover your long-term care today, but it may not be enough to cover your long-term care 20 years from now because of inflation. Now, there's no risk of losing that premium because even if you die before ever having access to long-term care benefits, your beneficiaries are still going to get that tax-free death benefit to use. Now, there's asset-based programs. These are basically a fixed annuity with a long-term care rider. Your money stays your money. So you put a lump sum of money in, say, just to keep it with our example of $300,000, you would have to put in $100,000 into the annuity. And if you go into long-term care, that annuity triples your money for the purposes of paying for your long-term care. Now, they're very easy to qualify for. They're very inexpensive. The fees in these annuities are extremely low compared to what you would pay for a long-term care policy or a life insurance policy. They do have inflation protection. Now, one of the drawbacks is your liquidity on that $100,000 cash is going to be limited during the first 8 or 10 years or whatever the surrender schedule is of that annuity. But once the surrender schedule has run, then it's going to be 100% liquid and you can do what you want to with it. Some of the drawbacks are there's maybe surrender charges. So if you decide to take money out or take up more than the penalty-free amount during the surrender charge period, you will pay a surrender charge. And they start out kind of high, 8 or 10%. They go down every year so that at the end of the period, the surrender charges go away and there's no period. It's 100% liquid. But now remember, there's no surrender charges if you use the money for long-term care. If you need to get out whatever the amount is to pay for your long-term care, the surrender charge is waived. So this is a good option for people that have money in the bank, especially if you have a CD that's not earning anything. These annuities are currently paying somewhere around 3%. That's in 2021. So if you're in a different area in Texas, or if this is at a different time, don't hold me to that number. We'll have to get you a quote and see what they're paying. However, I can tell you that they're much, much better than any bank deposit account that you're going to have. Okay. So that is the end of the long-term care presentation. I'm going to back this up just to kind of rehash some of the options that we have. Remember, Medicare will pay for the first 100 days with some out-of-pocket for you if you've been in the hospital prior. So that's what they would term medically necessary skilled nursing facility care. Okay, beyond 100 days, you're on your own, and you have to have had a plan before you need it. You can't get long-term care insurance after you go into a nursing home. Okay, you have to plan for this ahead of time. So if you have any questions on this at all, or you just want more information, give us a call. The number is 830-217-6711. Reach out to us on the web at t65s.com. We've got a page on there that talks about long-term care. I'll put a link to that page in the description of this video, and then the video will also be posted on that page. If you enjoyed this video, you found this information helpful, please give us a thumbs up down below. This helps YouTube find people who are looking for the same information that you were and get this video to them. Also, subscribe to the channel so that you can be notified when we post another video. So I hope you enjoyed the video. Hope you have a great day. Thanks, folks.